All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Unstoppable. Relentless. It's the ironclad investment discipline. What to expect in a bear market? Well, before I start this video, I should start by saying I don't know if we're heading to a bear market right now with everything that's going on with the tariff war. But if we are, I think it might be a worthwhile exercise to look at, if we study other bear markets going back to World War II, what do they typically look like, so that you can go into them eyes wide open as to what you might be able to expect. So I'm going to put up on the screen a page that shows all of the bear markets going back to World War II. I'm missing a couple. I'm missing a couple of more recent ones in 2020 during COVID. I don't have that one on there, but that one went down and went back a few months later, so it was very short-lived. And then also in 2022, and that was also a short-lived one. But bear with me. I think the other ones that I've got on this page will give you an indication of what to expect. So if we go to, for example, the first one, and these again, there's 14 bear markets going back to World War II. If we go back to the first one at the top of the page, between 1946 and 1949, this is all the S&P 500, but every market would exhibit the same similar characteristics in terms of a bear market. By the way, bear market is just a fancy term that anytime the stock market drops more than 20%, that's considered a bear market. So look at the first one. Between 1946 and 1949, the S&P 500 over that 3-year period dropped 30%, and it took 36 and a half months. So call it 3 years. Once the market found its bottom, it took 3 years for the market to go on, erase those declines, and go on to set new highs. And if we just kind of go through the page, the next one between 1956 and 1957, the market dropped 21.5%. It took 14 and a half months for the market to recover. And we just go back. I'll look at the worst drops right down at the second from the bottom of the page. You can see between 2007 and 2009, the tech crash. S&P 500 dropped 57%, but it took only 17 months to erase those declines. And then the big one was also right above that, between 2000 and 2002, the great financial crisis. That was the tech crash. The market went down 49%, and it took almost 3 years, 30 months for it to set new highs. So if we look at history as any guide, which I think that's all we can do, historically, I've done the math, the average is 14 months. That's how long it takes a bear market for the market to go on to get back to where it was. So said another way, you got to watch the value of your money, whatever portion that you have in stocks, decline on average somewhere between 30 and 50%. And then you got to wait 14 months before your money starts to show a positive return again. Now, in some cases, it's been as high as 3 years. So if that's what we're heading to, prepare yourself that with the portion that you invest in stocks, you could be looking at, like I said, 35 to 50% drawdown, and then being underwater from anywhere from a year to 3 years. And historically, it's been 14 months. So when you kind of frame it that way, for me anyway, it's not as scary as what some people would make bear markets to be. Of course, it's never fun watching the value of your net worth go down significantly like it does in bear markets. But as I've said before, it's an inevitable part of getting the superior returns that stocks offer. And if you can't stomach that, then you don't get the superior returns that stocks offer over bonds and real estate and every other asset class. So hopefully this has been useful or valuable in terms of what to expect in a bear market. I'm not saying we're heading to a bear market right now, but I promise you at some point we will again, whether it's because of tariffs or whatever other crisis that comes in front of us. Just arming yourself with what to expect, I think, hopefully helps you stay invested when we go through these periods of turbulence. Hope this has been useful and valuable. Thanks for your viewership.